All right, I think we're live. Yes, we are. Hello, everyone. It's going to be just a few more minutes until we get the show started. Just waiting for a few more team members to join me and more people coming in onto the stream. Welcome, everyone that's already here. We're going to try and make this session as interactive as possible. The first maybe 20 to 30 minutes is going to be a look into the market structure at the moment and the potential of Bitcoin versus the recent performance of various DeFi coins. We're going to talk a little bit about Kyber Network as well today because obvious reasons. Let me show you what's been happening over the last 24 or 48 hours, pretty much ever since KNC or Kyber Network announced that the Catalyst upgrade is going to be launched on July 7th. So yeah, we're going to be talking about what we think about this particular rally and how it's already manifesting on the charts. There's quite a few worrying signals for KNC at the moment. And we'll talk about some other DeFi coins as well. But in general, I would definitely like to hear from you guys the types of coins and assets that you would like us to take a deeper look at during today's show. So we're going to talk a little bit about Bitcoin and several DeFi assets, but I would want a big chunk of this stream to just be, talking to the audience and interacting in terms of answering questions, just doing some real-time demos of some of our metrics and different coins that you think are interested. So anyway, like I said, it's going to be just a few more minutes and we'll be good to go. Hey, Brian, Max is here as well. Okay, Brian, let me know. We're already live, by the way. I just told the people already on the stream that we'll be starting in a few minutes. Let me know if you've shared the links everywhere and we can kind of get the ball rolling.
Yep, they're all shared.
Okay, 1 second. Let me double check my OBS. Everything seems fine. Can you say something once again, Brian, just so I can check that we're getting your sound?
Test 1, 2, 3.
Yep, definitely are. Okay. Max, if you already want to share your screen, go ahead while I intro us in. Let me start recording. And we're live. All right. Hello, everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, this is a weekly panel call where the Santiment team and sometimes different community members join us to discuss recent crypto market events. But we do this from a bit of a different perspective. We don't really talk all that much about TA, but rather we try to bring context to recent market events from a variety of different sources, mainly on-chain activity, social media activity, and crowd sentiment, as well as development activity. So we're going to talk about all of these and more today. If you haven't used Santiment before, I strongly suggest checking out santiment.net. We have developed dozens of tools and custom metrics and indicators over the last 3 years to help you better understand the crypto market and the behavior of its various participants, whether that's speculators, the crowd, whales, miners, anyone that really has a stake or an interest in the performance of various crypto assets. We try and track their behavior and plot them on a chart for you. So anyway, I suggest checking out santiment.net after or during the call. And also, if you don't want to wait until next week to kind of join these types of discussions, we have them every day on our Discord. The link is going to be in the description of our video as well. So if you like what you hear today, definitely check out our Discord as well. All right, with those introductions in place, I am going to now give it up to Maxim because he wanted to open today's call with some interesting chart setups that we've been seeing lately. Max, you're already sharing your screen. Let me try and full screen you as well. All right, Max, you're good to go.
Good. So everyone, what we want to show here is an interesting observation we've been following for the last maybe 1 month at least. That activity moved, or activity of hardcore speculators in crypto moved away from Bitcoin and Ethereum to mostly DeFi-related tokens, but not only. So-called smaller, riskier altcoins. Now, we knew it a kind of, most of you, if you're on the call listening, you also knew that. Now, there is some visual. It's a kind of brand new feature on Santiment platform. Now we can see the visual story on one screen. What is on the screen is like green as always is the price of an asset, and the first is Ethereum, and then you'll see below Bitcoin, and the gray, and for other coins it will be in pink, bright pink color. It's in volume, trading volume. So the hot and peak of trading volume happened end of April. Yeah. You will see that since Black Thursday it was growing and then it peaked, and ever since then it's actually slided down. Trading volume for Bitcoin and Ethereum, but only for Bitcoin and Ethereum. Yeah. And actually for us, it was always like a warning sign. When you see this kind of deviation or divergence, like price pushing up, trading volume going down, we always say, oh, okay, well, that looks like a bear market, like a crash. And we're still like seeing struggle for this both to pick up with the price. Yeah. But without going too much in details, while this divergence is so much of importance, we want to show the following things. Now, if they don't participate in Bitcoin and Ethereum, does it mean that the rest of the market struggled? No, not at all, by all means. Now, the next one, 0x, it broke this pre-Black Thursday top with ease, like a knife through the butter, and on a huge volume. So this was the first one which did it somewhere in May, beginning of May. Yeah, as Bitcoin and Ethereum kind of topped on end of April, 0x did it. But it didn't stop there. Then OMG, when it was listed, especially together with listed in Coinbase Pro, it did the next 22nd of May, also on a very strong volume, and again broke top from before pre-COVID or Black Thursday time, almost like doubled from it. But it didn't stop there. We had the same situation as with Maker, yeah, with MakerDAO coin. It also pumped on a very nice volume a bit later. It was first attempt was end of May and then the middle of June. But it does not stop there. Now we see KYC, Kyber network, and it's actually low pumping right now. And this is a top from before Black Thursday. It's even like a dwarfed. It was so low and so far away. Price ever since increased like 3 times or 5 times. I didn't need to calculate more precisely. But it doesn't stop here. We have the same story for REN, Republic Protocol, where you can put the Bitcoin on the Ethereum network and do this all the beautiful DeFi operations. And again, you see the volume flew here, the price pumped, or actually price pumped, the volume flew, more like correct sentence. And then it was, again, the price of REN is far beyond what was Black Thursday. Yeah? And the recent example is Compound. Well, there was no price before Black Thursday, but it's also huge volume there. So what can we take from it? There are a few very nice learning out of it. The crypto market is maturing very, very fast, in our opinion. It becomes more like an established market where you have blue chips or big area of the market, and it's like Bitcoin, Ethereum, and there are smaller coins which sometimes live their own life. And yeah, it's very exciting to observe, and especially we don't show in this chart. There are tons of data which can make your analysis even deeper. I think Dino will mention it in some of his examples. So this is two learnings. One, we do have split the whole market. Might be a kind of, you think it's struggling, but if you look carefully, it's not. There are a lot of smaller risky coins which are way beyond it, like Tesla and Amazon. We already broke the tops, same here in crypto. And second, there are a lot of interesting data. When you start analyzing, you might see the story behind how the evolution of crypto is happening, and where the valuable next gems are coming, and especially where the tops are coming. But this is more topic for Dido. So this link to this chart layout, I made it public, and it will be, I think, posted in our description for this YouTube channel or for this YouTube video.
You can also share it directly in chat, Max, after your talk.
Yeah, I will share it. And with this, I give microphone to others. And as a topic, as a topic is, we did it a little bit provocative. Bitcoin below 9,000. What happens the rest? And actually, it's not a given it will go below 1,000 for a long time, because as you see, there is a lot of life. We just speculators move the activity somewhere else, and if they see the chance, okay, now Bitcoin a reasonable cheap price, let's pump it. It can happen anytime. So just rest assured you don't miss the opportunities, but you don't jump on opportunities too late. Yeah? Or I mean, too close to the top, which is painful, because as you will see, as you saw from all the altcoins, when they correct, they do it quite dramatically and painfully. OMG, on OMG, you see, it was like it was 2, and at the bottom it was 1.37. It's painful experience. So, but anyway, we will cover these topics, and I will share the link. Yep.
So yeah, the as you mentioned, Max, basically the way we phrased the sort of main topic of this call is, can DeFi coins kind of withstand the Bitcoin falling below 9K? Now, obviously, that's not a given that Bitcoin is going to fall, but I think what you shared here is kind of what I wanted to drive home during this call, is that we have been seeing for a few months now this sort of capital flight, so to speak, from these big or top large cap coins, established blue chips, like you call them, like Bitcoin and Ethereum, pretty much ever since they started consolidating. And we have seen speculative interest move into a bunch of coins that have not really had this sort of a speculative exposure in the past. So I guess to me, the question would then be, if the trend continues, if we continue to see the volumes and speculative interest move away from Bitcoin and Ethereum into these, distributed network of altcoins, I think the more that happens, the more likely it is that, the gravitational pull of Bitcoin becomes less, right? And we kind of try to slowly become this, move into a more mature ecosystem where it's not one asset that is controlling the price action and the performance of pretty much the entire crypto market, but rather, speculators being able to let altcoins decouple more and more as we move, into 2021 and so forth. So would you kind of agree that if this trend sort of continues, that we see these volumes move away from Bitcoin and Ethereum into these, a variety of not just DeFi coins, but I think like OMG, which isn't necessarily DeFi related. If we see this trend continue, should we extrapolate from that the fact that Bitcoin might start losing its dominance over the rest of the market, at least as far as the impact that its dumps have on the market?
Well, the dumps, no, the Bitcoin dump, it's not by itself a separated event. It means in general, the whole crypto market, or actually the whole financial assets now experience something. Mm-hmm. And it's just reflected on Bitcoin and everyone knows it, but it will, of course, impact all the rest. What is more interesting, you mentioned it, there is one important aspect. I think here there are two, but one is related to what we've just discussed. Of course, people moving and increase in value, be it fair, unfair. There are also some tricks how people do it. With all this listing and Coinbase Pro. But as soon as the values they increase, they pull out of the big players, market makers, so insiders, they pull out their money out of there. They know what will happen next. It will be dumped. where do they park it? How do you think?
Probably.
That's a good question. Yeah.
I mean,
as long
yeah.
as not all of high value project pump, there is a good chance they will move it on to the next project. But it will be over soon. There are not so many left. I think maybe 10, 15 left, or like of really what I think is a high quality. And then it will flow back to Bitcoin and Ethereum. This is the key point. So if you think about, because they will not move it to fiat, like has no value. And what else? They will not keep it in stable, or some part of the profits they will keep it stable just to make sure they can buy something very cheap if it goes along the way. The rest will flow back to Bitcoin and Ethereum, and it will flow as when we see 80% of possible projects which can be pumped are pumped. It will flow to Bitcoin and Ethereum massively, yeah, because also it's a player. It's a very competitive environment. They know, okay, if I'm not the first one, there will be someone else of my competitor who will participate in all these pumps. They will do it, so it will happen very fast. It, like as usual in crypto, 3 days and suddenly Bitcoin price increased by 20-30%. Yeah, and we've seen the attempts to do it Bitcoin a few times in Ethereum. Till now, it was always like kind of dumped. Yeah, and I think it's coming mostly from derivatives market, but exactly because it was coming most volume from derivatives markets. But if people start accumulating real tokens, like Binance, this is where the situation will change. But for now, yeah, let's enjoy the ride of altcoins. It's not over yet. I mean, there are still enough. For instance, like comp, I think after this correction, what I see as a pattern seems to be a good candidate to pump soon. Because you see volume was very low, but now it's increasing. Yeah. Anyway, I don't know no details with comp. It's not financial advice. It's not over yet. There are some projects left. But when it's not so many left, and we see more and more BitConnect style pumps where like no value, not value or whatever, and I'm seeing it now in DeFi. It's kind of like very weird projects, like pumping, like you say, okay, quality isn't there. It's just they're trying to utilize it. If more of this coming, okay, first maybe dump, but then the Bitcoin Ethereum will profit again quite a lot. And in general, yeah, Bitcoin will lose, very likely lose instantly. Like, there is no way out. It's just too competitive field. It doesn't cover even 10% of use cases of crypto, and there are projects who are doing it very nicely. So the value will go there. Like you cannot change it. Even Ethereum, I think, cannot pick up with everything anymore. There are this interoperability, like Cosmos, Polkadot. They will also cut quite good portion of value.
Yep.
But so the dominance, and it's good. It's decentralized finance, right? So it cannot be in one hand. So it should be kind of distributed, more or less. But there will be good pumps with Bitcoin and Ethereum. It's like when everyone maybe forget about that it will happen.
Yeah. Okay. Thanks, Max. On that note, the second part of today's call, we wanted to. So we mentioned in the title of this video, can DeFi coins kind of survive Bitcoin falling below 9K? So the question there is, or the implied question is, what is the likelihood that Bitcoin falls below 9K? So we wanted to take a look at Bitcoin's recent on-chain and social activity to figure out what is the data implying. So Brian is already sharing his screen. By the way, before Brian starts, like I said at the beginning of the stream, we're going to, after this, have another block where we talk about a few DeFi coins, specifically KNC and REN, and various top patterns that we have seen in their on-chain and social data. But after that, I would definitely like to have some chat interaction. So if you guys have specific coins that you have been looking into over the past week or so that you want us to kind of do a sort of a real-time analysis of based on our data and figure out or try to figure out what we see and what the different stakeholders of those coins are doing, let us know in the chat and we'll get to it after our demos. So Brian, if you want, you can go ahead. I think you're already sharing your screen, so should be good to go.
Yep. Thank you, Dino. So for a lot of you who have been following Santiment for a while have probably noticed that we focus on a few different leading indicators, and two of the most important focus on the daily active addresses, which are the amount of unique addresses transacting on a network on a given day. And then we also have token circulation, which I'll get to in a moment, which discusses the unique tokens circulating throughout the network on a given day. These two things are two of the most important indications as to what the actual on-chain health is of an asset, not just for Bitcoin and Ethereum, but for any asset. But they also, they give some perspective on the long-term scale too. So I like to look at these indicators as more of a mid or long-term type of indication as where things are going to go. If you look at a chart like this, you'll obviously notice how noisy it is as things fluctuate throughout the week, especially on weekends. Things tend to lessen for both addresses and tokens. But during the week, especially Monday, Tuesday, that's when things tend to explode and go up. And sometimes that can be all weekdays to an extent, but early weekdays in particular. But that's why we look at these mid and long-term trends. And what we're looking at here is the 2-year trend for daily active addresses. And as you'll notice, on Wednesday, we hit a 2-year high of 1.084 active addresses, both depositing and withdrawing on the network. And this is pretty significant. Obviously, if you look over time, there's a distinct trend going on between what the price is doing and what the actual active addresses are doing. And I'm focusing on the 5-year now, just to give you some perspective. We could clearly see that the daily active addresses back when things were really surging, beginning in 2017 or so, probably even 2016, it's hard. But we've been going up for some time here with daily active addresses. And obviously, as we hit that 2017 bull run, things peaked. But you can see from a comparative perspective, this is actually when price on its scale went above daily active addresses, which sort of indicates that we kind of had a bearish divergence forming clearly because DAA wasn't keeping up with price at this point. We'll rarely see an extreme example like that, but we'll tend to get enough of an indication using our models, which I'll show in a second, to show when a bullish or bearish divergence is showing on a midterm basis. So this is the 5-year trend for Bitcoin. We just hit a 2-year high, and with the prices going up as much as they have already, the question is whether the DAA has been going up enough to actually trigger bullish signal on our DAA versus price divergence. Shows a 21-day rolling trend of where daily active addresses are in perspective on sort of that 3-week time frame to give an indication of whether it is having a surplus or a deficit of daily active addresses compared to that given price. Right now, you may think, oh, we just hit a 2-year high, we've got to be on a bullish signal. But actually, because prices have jumped up so much since Black Thursday, and we've kind of already been on a sort of 9K ranging 2-month trend for some time, we've been seeing the daily active addresses pretty high for quite a while. So even though we hit an all-time high, it isn't like it's a gigantic surge that just occurred as an outlier the last few weeks. So it doesn't trigger as a bullish signal the way it did like crazy over during Black Thursday and back in late 2018 when we were starting to bottom out. We can look at the short-term trend for Bitcoin, and we'll see that we are getting some minor fluctuations that are leading toward a bullish hint of things, but we tend to look at about the 0.3 range as a threshold of significance, and we're not quite there yet. Granted, we are close though. So this is why we always try to look at the short term as well. So we are in the right direction. We have, what would we call this? 1, 2, 3, 4, 5, 10 straight days of bullishness, if you want to even count the 23rd, which is almost dead even. It's a good sign that we are getting some starting to get a surplus of daily active addresses happening. So with a little more of a push, I would say that we're going to be seeing a green signal or 2 or 3 very soon if active addresses stay as active as they are right now. Now we want to move on to Ethereum really quick. And with Ethereum, we hit an all-time high, which was even more significant on Monday. And this was much more of a giant spike we saw pretty much since Black Thursday. This has really exploded. To look at the 5-year trend here, we can see that it really is at its highest level since, we would call this probably about May of 2018. If, you know, more or less it's right on par with where it was in June. But May, June 2018 was the last time we saw these levels of daily active addresses. And it's a really good sign for Ethereum. And you'll see with both this one and with our token circulation, which we'll get into in a moment, it's kind of waiting on Bitcoin right now. And once Bitcoin seems to stabilize and show enough health on its network, I feel pretty confident that these are good signs that Ethereum is going to have a lot of upside here. So going back to the model, our 2-year trend, once again, is not showing us. Just like with Bitcoin, we're getting close. Keep in mind the threshold for Ethereum is going to be a little higher because it's a smaller market cap and it has a bit of a shorter history. 0.45, 0.5 as the threshold to cross to really start to get some actual signals showing up. But right now we're still in neutral territory. And even though we can be very excited about our 2-year or 2.2 year, you know, high of daily active addresses, there's still a little bit of a ways to go here before we can feel really confident that things are going to take off. And our model is kind of proving that by not showing any signals here yet. Speaking of daily active addresses, I've been working behind the scenes a little bit on another model, which actually takes a large scale of about 2 years at a time and averages all of the daily active address metrics that we got over that time frame and averages the price closes that we got in that same 2-year time frame. And what I did was I did a calculation of the deviation from the mean. So the most middle numbers over those 2-year spans for each one, and blended them all, found what percentage away from those averages both the DAA and the price was, and calculated the difference. And what I found was we've got a very good leading indicator here as long as you're a long-term trader and you can handle a little bit of noise in between. But what this shows is anytime the price deviation from the mean is higher than the DAA deviation from the mean, we're going to get some red signals like this showing that the DAA is not keeping up with that 2-year price average expectation. On the other hand, when DAA is way above, we're going to get a lot of these green signals. And sure enough, when you're seeing the reds here, that is usually foreshadowing a drop. Now, obviously, this one was noisy. This was back right before we hit that bottom, and we were in that 6K range for a 4 to 5 month stretch that was making people pretty complacent and impatient. But as soon as things dropped off, that's when you noticed that we were getting a huge surplus of daily active addresses, showing that at these prices, we were at a good bargain. And when we hit those 36, 3,700, you know, dollar, actually here at one point, this was kind of around the bottom for most people, unless you were really precisely watching those 3,200 levels. That's when we got those huge bullish signals telling us it was time to buy. And anytime you see a neon green here, that means it's a top 10% deviation. And conversely, deviation.
By the way,
and
sorry,
these
just
are
one
these
sec,
are
Brian. Is it just on my end, or is Brian a bit choppy? I seem to be getting some. It's not like a robotic voice, but he seems to be skipping a few seconds on my end. Gary, Max, are you hearing him fine?
Same on my end.
Okay.
no good.
But it's not so bad. It just happens like every second minute for 5 seconds. So that you know, Brian, yeah, it does happen, but I can follow you.
Okay.
But yeah, something is like happening on your micro. Or your
it could
connection?
be, could be the connection
I
issues.
think it's I think it's a connection. If it's a mic thing, it's probably just gonna be staticky.
Yes,
But
yes,
yeah,
yes.
sorry guys, nothing I can do right now.
LA is cut from the West Coast or East Coast.
Exactly.
No worries.
So
Go ahead,
bear
Mike,
with
sorry.
me, guys. Yeah. So long story short, this model is something I'm going to be talking about more and more and perfecting over the next few weeks, and I'll be dropping an insight about it to explain it further very shortly, probably in the next 2 to 4 days or so, I would say. But long story short, look for these neon signals as bottom indicators. Look for these neon signals as top indicators. Right now, we're getting a lot of choppiness, which kind of correlates with the 9K ranging that we've seen for about 2 months now. This spike right here, I'm going to zoom in really quick just so we can see what's been happening over the last few days. This spike here was this all-time high of Bitcoin daily active addresses. So yes, it was very good, but all things considered, we're at about an average area for price over the last 2 years or so when you take everything active. And even though daily active addresses reached that 2-year high, it only gave a slight, I'd say better than slight. This is still a good bar to see, but it wasn't enough to be a top 10% outlier the way we saw on Black Thursday and after we saw the bounce and the retracement. And you could have gotten in around the mid 6,000s in April. These were the last 2 times we saw a super bullish signal. And then the last time we saw a super bearish signal was right around the top when we were at around 97, 9,800. And eventually we had a close. Maybe we never actually had a close above 10K, but most of us know that it actually had an intraday price of about 10.2 at one of these points right around there. So really cool model that I'm going to be sharing with our Sandbase Pro subscribers in the next week or 2, and you'll have access to this, which is going to be very useful, hopefully. Really briefly, I don't want to take too much time on NVT because I already talked about DAA for 15 minutes. We're going to look at daily circulation for Bitcoin. We have seen mostly choppiness over most of 2020, but if you look at the spikes, most of these highs came at the beginning of the year. We had one in mid-January, a couple in early February, and then one big one in mid-March, which was our biggest spike since about July, August 2019. And then over the past couple months, it's a slight downtrend. This is actually kind of a slide, and that's not a good sign. So if you're looking at the DAA as a bullish sign, this is the argument against that, because unique tokens are not being moved around as much as they should be at these price levels. And if we look at our NVT model, which many of you are familiar with, you'll see that our last full month, June, actually gave us our first bearish signal since January. And this basically confirms that our market cap right now, once it got to about a high of 10.2K, June was saying we're going to need a little more unique token circulation to stay under these trend lines right here. And we didn't see enough. Therefore, we got our first bearish signal, because this model over time is going to expect more and more token circulation to justify the prices that they're at. And through just a couple days in June, we are seeing kind of a better sign. But I don't want anyone to look at 1 or 2 days and think that we're suddenly in bullish territory again. So we're going to check back on this after 10 days have elapsed on June 10th, when our next one, or I guess I should say 9, because we need closed prices in order to study this. But that'll give us a better perspective of how July is looking. But right now, if you look at the most previous month, we're not getting enough token circulation, and that's not a great sign. Not a great sign. So we've got DAA, which is looking great, and unique token circulation, which is not looking great. So contradictory signs there. Really, really tough to tell what's happening right now and where things are going to go based on these 2 metrics. But we can also look at social metrics and other things that Dino may touch on at the conclusion of my segment here. Last thing I'll show is Ethereum really quickly, which is looking better. We've actually been seeing very good token circulation over the past 3 months, and with the outlier of April, which was neutral, we've gotten either semi-bullish or bullish signals every month since February. So that's great. June in particular was looking pretty good. We actually saw an improvement on May. So once again, I think that Ethereum is waiting on Bitcoin right now, and it needs Bitcoin to sort of stabilize and not have red months like the one it just had here. So yeah, if you do have a Sandbase Pro account and you don't have access to this yet, just contact us and we'll make sure to connect you to this model here. And yeah, I think that's about it on my end. Any questions from Dino or Maxim or anyone?
Yeah, I mean, I wanted to touch upon this new DAA template that you've been working on and this latest spike, which didn't really break into the sort of neon, line or threshold, which, as you say, tends to indicate these very either undervalued or overvalued conditions. But even looking at the previous or recent spikes in the green sort of line, right? In these divergences where DAA was fairly strong versus its price. So this most recent one tends to seem kind of correlate with, if we look at the previous couple of spikes which didn't cross the neon line, right? They all also kind of came at local tops for Bitcoin. So if we look at the few ones that came in the last couple of months, so the one before this one, right, came right as Bitcoin kind of bottomed out on, what was that, like middle of June?
Let me, I'll zoom out just a tiny bit here so we can see both the date and the spikes at the same time.
Okay.
Here we go. So which one are you talking about?
So the one right after that one, right? So this spike in
This one here?
yeah, this spike in the daily active addresses versus the price, it came right at the local bottom for Ethereum there. So Bitcoin bounced back slightly. Obviously, this is very choppy, just given the consolidation period. But even if it doesn't go, that the signal doesn't get ultra bullish, it does seem to kind of catch some local bottoms for BTC. And even going back one spike before that, around, what is that, like May of 2020? Yeah, right there. Yeah, you see it spiked right below the two tops, actually.
Yeah, it basically justified, it said at these levels, when it
Yes.
obviously shot up to about 10K and then went back to 86, this is basically saying, whoa there, we're still getting a lot of daily active addresses. This is probably a really good, it's basically what it's saying.
Right. Very cool. Okay. Yeah,
Yeah,
so
so
as Brian mentioned, this will be available. I guess, Brian, you're going to be writing an article about this, and the template is going to be available to everyone on a Sandbase Pro account, right?
yeah, absolutely. And yeah, I don't even know if I showed Ethereum on this one. Did I actually get into it? But Ethereum is looking much better. I think I might have skipped over this part,
Yeah.
but yeah, we're getting a series of these signals on the Ethereum side. So that's further start looking positive again. We will probably start to benefit from these neon spikes, because same with Bitcoin, this one is quite reliable. Might even argue that it's even more reliable. It's very spot on. I mean, these neon spikes here correlated with the bottom, these red neon spikes correlated with the top, these neon spikes correlated with the bottom. I mean, going all the way back,
Yeah.
back when Ethereum was topping, nothing but neon spikes. These were the biggest spikes I've ever seen, like negative 165% deviation between DAA and price. I mean, it's pretty crazy. I haven't actually seen any fake outs on this model over this 2-year span. Anytime it's neon, it's basically lined up with Ethereum. So
It's quite
take that for
interesting.
how you want to.
It's quite interesting that now it's I think it's the first really time that it's peaking in the super bullish zone while Ethereum is consolidating. So I'm very interested to see how this plays out, because as I think you mentioned this already, Ethereum has just recently hit a 2-year high in daily active addresses. However, the last time that Ethereum had this amount of network activity in terms of just the amount of addresses moving Ethereum between each other was at one of the tops in 2018. It was right before a major correction.
Right.
So these are very different market contexts between these two spikes in daily active addresses. And I think, in general, Ethereum currently is exhibiting some very strong on-chain activity. You can see this on the chart as well. Very much compared to its price action, it's actually showing extremely strong on-chain activity. But usually these models have, kind of peaked into bullish territory around during the downtrends. So I'm very interested to see if the history repeats itself this time, given the fact that Ethereum isn't really currently experiencing a downtrend. It's more still in ranging, similar to what Bitcoin is doing. So yeah,
Right.
keep an eye on this over the next couple of days, guys. For the first time in what is that, like pretty much since the Black Thursday dump, we're seeing the daily active addresses be very sort of strong compared to Ethereum's price performance. So yeah, stay tuned, I guess.
Yeah, and you'll see these series sort of start to build up as the price is ready to make its next move.
Mm-hmm.
So, as long as Bitcoin stays okay, if we get enough of these bundles, it's only a matter of time. But obviously not investment advice, and we have to see how things play out.
Right. Okay, great stuff.
Cool.
Thanks, Brian. So there you have it, guys. As far as Bitcoin and Ethereum are concerned, at least, we are seeing some mixed signals for Ethereum. Mixed signals for Bitcoin as far as its transaction volume and token circulation, or generally the amount of value being transacted on the network, is kind of still a bit too low compared to its market cap. So that's not really flashing a bullish signal, but we have still some very strong on-chain indicators in terms of Bitcoin's activity. Its daily active addresses are extremely high at the moment, which should bode well, just given the market context overall. And Brian mentioned, so before I go into DeFi coins, Brian did mention Bitcoin social data as well. So just very quickly, let's go into the crowd sentiment and look into crowd sentiment for Bitcoin recently. I'm going to look at its sentiment on Twitter specifically. So for those of you unfamiliar with these metrics of ours, what we have done is we track over 1,000 different crypto-specific social media channels, and we label the messages this time in this particular setup. We are looking at all of the messages containing the words, Bitcoin or different types of synonyms for Bitcoin, BTC, or whatever, and we label all of the incoming messages as either positive or negative or ambivalent. Those that our system is just unable to really attach any value to, whether it's positive or negative, we filter them out as to not overfit the model. So the result is this chart. We call it weighted social sentiment, where essentially these spikes in orange show the massively or overwhelmingly bullish sentiment towards Bitcoin on crypto Twitter, and these drops below zero are the exact opposite, or these sort of divergences into bearish territory more and more. So currently, we are in a significantly bearish mood as far as Bitcoin is concerned on Twitter. This is, at least in my just personal experience, pretty much on point. I've seen a lot of people, technical analysts, and just crowd and general market enthusiasts alike, starting to make the case that this prolonged consolidation is going to end up bad or turn out bad for Bitcoin. Now, the fact that Bitcoin is currently still in a very bearish territory, if you've been listening to our calls previously, or if you've been reading any of our insights, you know that we don't necessarily think that this is a bad sign. If you look at historical trends, it's very clear that most of Bitcoin stops or kind of corrections came at these massively bullish sentiment territories, where the crowd is overhyped, it's overvaluing the coin, it's starting to act irrationally. People are kind of FOMOing in, not really thinking about general market conditions, and this is usually when the whales start dumping on the crowd. So if you see both of the tops in 2019 correlated with spikes in bullish sentiment, this one here as well before the Black Thursday dump, the one around the halvening, obviously, just asked for a correction. So the one here as well, it led to a short-term correction, and then we went into a bearish territory before we really managed to bounce above 10, 11, and 12K once again. So if you, on the other hand, look at Bitcoin's bearish cycles in the past, you can see that they usually correlate with breakouts for the world's biggest cryptocurrencies. Here, obviously, after the Black Thursday dump, we ventured into bearish territory once again before really breaking out above 9 and 10K. So currently, at least as far as the crowd is concerned, they are reasonably concerned about Bitcoin's short-term price action, which historically has boded well for Bitcoin's price. So obviously, this doesn't necessarily need to mean that we are about to see a breakout, but just showing what Bitcoin's on-chain and social data are currently telling us. So there have been some mixed signals as far as its on-chain data is concerned. As far as its social data is concerned, historically, this has been a good level for Bitcoin as far as its crowd sentiment is concerned. All right. So before we go into DeFi coins and look at KNC in particular, I wanted to once again mention that if you have any requests or suggestions as to what you guys would like us to see after I talk about KNC a while, if you are looking into any coins and want to hear our opinions on them, if you are thinking of maybe getting into some trades, or you just want us to look into some charts, let us know in the comments, what coins you are currently looking into, and maybe have some questions about it, and then we'll get to it at the end of the stream. All right, looking at DeFi coins and a few of them specifically. So I wanted today to talk about KNC just because it is pumping like crazy at the moment, and usually when we do these calls, we kind of look at the the chart setups from a previous week, like we talk about things in hindsight. So what I wanted to talk about today is a ongoing situation, something that is currently developing, and what we're seeing on the charts as far as KNC's short-term potential, because at the moment it's still pumping. So the question is, can it continue to do so? Or are we sort of priming for a short-term correction? Obviously, this is in no way financial advice. I'm just going to show you what KNC's social and on-chain data are telling us. The first thing I'm going to talk about is KNC's social data. So if you look at SandTrends, go to app.santiment.net/labs/trends, you're going to reach the part of our platform which is essentially Google Trends for crypto. So those 1,000 different crypto-specific social media channels that we mentioned, we developed a bunch of tools around them. One of the tools we call emerging trends. It's this list right here, where essentially what we do is we try to find the biggest topics that are currently emerging within the crypto community. The way we do that is we calculate the social volume of these words compared to their previous 2-week average. So we find the words and the topics that are just kind of emerging and enveloping within the crypto community. And as you can see right now, KNC is pretty high up there. At the moment, KNC is topping our list of the most developing stories on crypto social media. 3 hours ago, it was still around the second place. When I was looking at it yesterday, it just kind of entered our charts at about 10 and then 8 places, 10 and 8. Now it's pretty much peaked. So at the moment, I think we are experiencing the peak chatter for KNC, and we can look at its social volume in general here for just a moment. We have so many metrics, I need to scroll for a while. All right. Let's look into KNC's social volume. Yeah, there we go. Okay. This is KNC's social volume over the last 6 months, and you can see this massive spike in the past couple of days. Now, obviously, this is connected to the announcement that Catalyst and Kyber DAO is going to be launched in I think it's July 7th. So people are already kind of pouring their money in. Maybe as a classic case of buying the rumor and selling the news. So the rally really started around June 29th right here, which is when the blog announcement came. And since then, it's pumped about, I think, about 30 or 35%. Now, these levels of social volume for KNC are not great. They're actually quite concerning as far as KNC's short-term price action. Now, I say that for a couple of reasons. One of them being the study that we have done maybe a few months ago, where we have looked at the performance of coins that have made their way onto the top three places on our emerging trends list. And they looked at their performance before they ended up on our list and 2 weeks after they ended up on our list. So we had this theory that a extreme spike in social volume usually correlates with short-term price correction. So we looked at 200 different instances in the past when coins ended up on our in the top three on our emerging trends. And this is the average price action of those coins 2 weeks before showing up on our emerging trends list in the top three positions, one of the top three positions, and then 2 weeks afterwards. So you can see this sort of massive rally in a few weeks and especially a few days before the coin starts appearing on our list of emerging trends, which makes sense, right? Because for most altcoins, and this is looking at everything outside of the top 5 coins, for most altcoins, the only reason why they start trending in the mainstream crypto community is because they're pumping, right? So after the fact, we see the coins start kind of consolidating for a few days at around the same level, and then over the next 12 days, the coins have on average, and this is looking at 200 instances of this particular phenomenon, the coins on average have lost about 9% of their total network value, of total market cap. So this is sort of the first reason why I think that KNC is currently entering some pretty dangerous waters. Now, if we just look at the social volume on its charts overall, let's look at the last year. You can kind of see this already on KNC's screen anyway. You don't need any sort of backtesting to see that social volumes and extreme spikes in social volumes for KNC have in the past correlated with short-term price correction. So we see it here right before this dip. Here we see it here right as KNC started consolidating. We see these spikes or conglomerate of spikes right as KNC sort of pumped to its interim top here on June 20th, and we see it happening now again. So I personally would not be too surprised if we are seeing sort of the last leg of a rally for KNC, at least for the time being. This is not saying that, you know, we're going to see a massive correction, but as far as consolidation is concerned, I think we're very close to it, at least as according to KNC's social volume. So that's the sort of the metric number one that I wanted to show you guys. There's a few more metrics for KNC that I wanted to touch upon. These ones being actually on-chain metrics for KNC. The one that I find particularly interesting is KNC's mean dollar invested age, which is essentially tracking the movement of previously dormant coins for KNC. And let's look at the last 6 months and figure out some trends. All right, so what you're seeing here is, let me try to explain it as simply as possible without trying to waste too much time. So dips in this metric show periods of time where coins on the network are starting to move at an increased pace, and coins that have not changed addresses for a prolonged amount of time are now starting to move between addresses once again. When you see these increasing slopes, this is usually an accumulation period where coins are actually staying dormant on average, obviously. On the network, they're staying dormant for a prolonged amount of time, and therefore you see very often actually these periods of accumulation end up in a rally of its own. Now, we have seen several dips, major dips, in KNC's mean dollar invested age over the last 6 months, indicating that we are now seeing a period of distribution or heightened distribution for the coin in question. Every time so far, KNC's drop in mean dollar invested age over the last 6 months has correlated with a short-term price correction. We see it right here at the top. We see it once again here. Like, you can't even make it up how clean it is. You see the drop right here at the KNC's top on April 27th. You saw it right here as well before KNC's consolidation, and now you're seeing the new spike, or sorry, new drop in KNC's mean dollar age developing at the moment. I would personally maybe want to see this drop in mean dollar invested age become a bit more excessive in order to call it a definite top. But you definitely see that the slope is no longer rising, and we are once again entering a distribution cycle for KNC in particular. So this is kind of indicator number 2 that something might be coming for the price of KNC, and it's not good. Finally, I wanted to look into KNC's token circulation, in particular, the 180-day token circulation. Oh, okay. 1 second. Yeah, sorry guys, this is we've done a bunch of changes to our platform over the last couple of days, so I'm still not used to the new UI myself. So let me try and plot the circulation. There we go. So what you're currently seeing is you're seeing the amount of unique KNC coins over the past rolling 180 days, right? So once again, we see that the amount of active KNC coins tends to spike at some very opportune or actually inopportune times for KNC's price action. We saw it spike here right before this short-term correction for KNC. We saw it spike once again quite rapidly during KNC's top here. We saw it spike here around KNC's consolidation period, and then once again we saw it spike before KNC started consolidating and actually correcting once again. So now, once again, we are seeing an uptrend in the amount of KNC being moved on the blockchain. This usually, especially if you kind of can connect it with the increased amount of coins being moved to exchanges, is a very potent signal that there's an increased sell pressure for the price, increased sell pressure for this particular coin, and the price might be adversely impacted. So this is 3 different metrics that I wanted to show as far as why I think KNC might be headed for a short-term correction. Now, I'm not going to make like a complete sort of statement that the top is completely in just yet, specifically based on what KNC's whales are doing. And I'm still not seeing KNC's whales in particular moving their coins. Let me show you really quick what I mean as soon as this loads. Okay, so here on sand data, we can look at the behavior of KNCs of, oh, actually I can do it here. We have holder distribution metrics now on our main page as well. There we go. So holder distribution metrics, and we take a look at Kyber network. There we go. Let's look at the last 6 months and the behavior of its various kind of large holder categories. Oh, something seems to be buggy. 1 sec, sorry guys. I think it's usually good because I'm hosting the stream myself, so usually the OBS and streaming kind of eats up a lot of my bandwidth, so this might be just on my end. Is anybody else able to access holder distribution metrics on sand data right now?
I'm checking.
Okay.
I also wanted to let you know that the stream on the call is not showing up, but it's still showing up on YouTube, which is strange.
Oh, it could be because I haven't shared my screen with you guys. Sorry about that.
Yeah, it's we don't need it. It's okay. I'm just watching on the stream anyways.
Okay.
I just went back and realized you weren't on it.
Yep. Sounds good.
Holder distribution, you asked? I'm checking that right now.
Yeah.
Okay.
Okay, let's see. Last 6 months. Okay, so what we're going to look at now is the behavior of different KNC holder groups, specifically those holding a bunch of KNC coins. Now, the first group that I wanted to take a look at is this one. These are addresses, or this is the cumulative balance of all addresses holding between 10,000 and 100,000 KNC coins. Now, there's something that you could spot fairly significantly going on here in the last couple of months. So every time that we see this particular category start to decline in its holdings, basically start to offload their coins very often to exchanges, you can see a correlating correction or consolidation for the price of KNC. So this one here, very obvious. Once again, we saw this particular group of holders start offloading some of their bags before KNC started consolidating, and here once again in a major move downward. At the moment though, we are still not seeing, for the time being at least, maybe our charts haven't updated just yet, but at the moment we are still not seeing this group of people or this group of holders start moving their coins just yet. Let's look at the one category above. I think it's pretty similar behavior. Yeah, it is. So you can see them here dropping or offloading some of their bags before this end, and then accumulating at this interim bottom before dumping once again. And we see it once again, people holding or addresses holding between 100,000 and 1 million KNC, dropping their bags quite heavily before KNC's consolidation period right here. At the moment, we see them start to offload a bit their bags. I think this is what, maybe 100,000 KNC being moved in the past 24 hours. So not a huge amount just yet, but the downtrend is kind of starting to happen. So we can see this below as well. If we look at the amount of addresses holding more than 10,000 coins, 10,000 KNC, we can see a very similar pattern. So the amount of addresses holding more than 10,000 coins starts to decline during some adverse times for KNC's price action. Here before the consolidation, here before the consolidation correction. At the moment, though, we are still not seeing this holder category start to decline. So it seems like at least for the time being, some of the KNC's largest holders are not yet content with offloading parts of their bag. So this might be, one optimistic sign for KNC as far as its on-chain data is concerned before you can really proclaim that we've hit the top. But there's definitely a number of concerning signals that I've shown you here previously, both in terms of KNC's social data and in terms of its various on-chain metrics that make me believe that a short-term correction might be possible for Kyber Network. Obviously, not financial advice. Okay, we're already at an 1 hour mark, so I'm not going to go much deeper into this particular point. So before we wrap it up, I wanted to check, Brian, since you're already watching the stream, if there are any questions or any kind of suggestions as to the coins or topics that we people want us to cover before we go offline for the week. Brian, you here?
Yeah, I'm here. I'm just looking at a couple particular questions. We led off with someone asking for our thoughts about Link as they're now supported by 48 DeFi.
Oh, that's a good question, because we're writing, I think Gary's writing an article about Link today. Yeah, okay.
Other than that, mostly just, a question here at the very end about Ren and Link.
Okay.
Actually, and SNX too.
And SNX. So as far as SNX is concerned, that's a very good point. For SNX specifically, we are going to have an update in the next couple of days. We are recomputing some of its on-chain metrics at the moment, so don't rely too much on SNX's on-chain data right now. We are polishing because SNX in particular had some, I think, changes introduced to their network, so we needed to recompute a lot of its on-chain activity and on-chain metrics. But we can talk about Link and Ren real quick before we end the stream. Actually, if Gary is here on the call, Gary, I don't know if you've been already looking into Chainlink for your today's insight. If you have, you can kind of go ahead and share your screen and share your thoughts. Otherwise, we can just do it live and kind of go over it in real time.
Not yet, Dino, not yet.
Okay. Let's see then. All right, so as far as the Chainlink is concerned, let's start with some basic metrics, right? For the first thing I want to look at is the amount of daily active addresses for Chainlink. Let's look at the last year and see just the fundamental support or network activity that we're experiencing right now. So as far as the general sort of network activity for Chainlink, you can see that it's growing, not exponentially, but it's definitely growing in the past couple of months. At the moment, we have recently hit almost a 6-month high here, if you ignore the spike at Black Thursday. And once again, this is something that we see quite often. As we hit that top right here, let me try and zoom in. Yeah, so this is something that we call daily active price DAA divergence, right? This is a setup that we see quite often as far as short-term price corrections are concerned. So you can see here that Chainlink's network activity started rising quite heavily with its price, and then in the next couple of days, it started declining back to its pre-pump levels. If you really zoom in, you can see that, you know, it kind of actually retraced back to its now standard network activity levels. However, the price has tried to push another high in the few days afterwards. However, it has now done that, or tried to do that, on a declining network activity, network volume, if you like. So usually we see this quite often for altcoins, where the price is trying to push another high, but the actual amount of network activity is waning. The speculative and general interest on the network seems to be declining, and therefore the ability for Chainlink or any specific coin to sustain an upward trend tends to prove difficult. So usually, what you want to see, or what you want to look into, as far as being optimistic about Chainlink's or any coin's price action, is you want to see a rising network activity into a rising price. Once you see these sort of divergences occur, where the network activity begins to decline and the price action is trying to push another high, this might be a dangerous territory for Link or for any coin. At the moment, though, I think currently we're, generally, I think network activity is fine enough. There's enough fundamental support to provide another sort of push upward as far as daily active addresses are concerned. Let's look at the amount of sell pressure for Chainlink. And I will do that by looking at the exchange inflow, or the amount of Link being moved to exchanges in the past, here, this is what, 6 months. All right, let's isolate this massive spike, which is kind of messing up everything else. Yeah, okay. Yeah, so you can see here, this is often what you see for coins during tops and before corrections. You see these elevated spikes in the amount of coins being moved to exchanges. Essentially, people moving Link ahead, trying to offload some of their bags and take profits. And if Link's bulls are unable to absorb this rising sell pressure and sell wall, then usually it can, affect the price quite negatively, as you can see here. So at the moment, the amount of actual coins being moved to exchanges, known exchange wallets, has been in a decline, which should be a good sign for Chainlink. Let's look at the actual amount of Link being available on exchanges. Yeah, it's continually dropping. So I would say, whether you are looking at short-term or long-term price action, this should be a good sign for you, right? As far as the long-term engagement with the network, you probably want to see this type of graph, where the amount of coins being available to trade on exchanges is constantly declining, which indicates a few things. First, it indicates that people are using it for various other purposes. Chainlink's, I think, use cases are growing. There's a lot of it now being kind of locked up in DeFi projects as well. But at the same time, this indicates that the actual amount of available coins to trade is constantly diminishing. And very often, what I see in altcoins when this happens is that, if all other things remain equal, the declining amount of Link or coins being available to trade does tend to inflate the price of remaining coins in the active circulation. So as far as Chainlink's long-term trends, you can see that its presence on exchanges is continually dropping, which should be a good sign for its long-term price action. Okay. Let me look at its mean dollar invested age, so that we can see if we are currently still in an upward trend or, okay. Once again, I mentioned this already when I was talking about KNC, where you see these drops in mean dollar invested age, meaning that the coin has kind of went away from an accumulation period and has shifted or pivoted to a more distribution cycle, where people are starting to move their coins in the network more extensively. If there's a correlating spike in exchange inflow, like we have seen there be here, this usually indicates that a lot of people are trying to sell their coin. So we saw a dip in mean dollar invested age for Chainlink right at this latest top, which does indicate people moving their coins to sell. We saw him at several different local tops for Chainlink as well. One here before a correction, a smaller one here before this correction as well. But since then, Chainlink has once again moved into an accumulation period. So on average, people are sticking to their coins. They're not moving them on exchanges. On average, the age of coins or the amount of time that they have spent in their respective wallets is currently rising, which should once again be generally a good sign for Chainlink's sort of midterm price action. And finally, well, let's look at Chainlink. So, I mean, there's quite a lot of graphs that I would look into, and I think Gary's going to write a deep sort of dive into Chainlink later today. That's going to be available on our insights. But just a few different metrics that we like to look into. Finally, let's look at Chainlink's social sentiment. Let's look at Twitter because Twitter is usually the most reliable source. Just because our social data has been trained on Twitter, on Twitter's messages. I mean our social algorithm. All right, so currently, Chainlink's social sentiment or crowd sentiment is fairly negative, which should be a good sign for Link. Like if we look at it here and here during these massive tops for Chainlink, it usually kind of correlates with some bullish pretensions and bullish moods. At the moment, Chainlink's crowd sentiment is relatively low. It's minus 0.7%. It's actually quite low. It's quite bearish if we look at its historical trends, which, assuming the crowd is always wrong principle, which tends to materialize quite well for Bitcoin and a variety of altcoins, should also be a fairly good sign for Chainlink's price action. Like if we see it here, Chainlink's bearish sentiment dropped significantly, or if you want, increased significantly at this local bottom, which kind of led the way to Chainlink's rally above 4.7 for the first time in 2-3 months. So yeah, I think in general, Chainlink's social sentiment at the moment is looking good enough to provide support for a sustained rally moving forward. So overall, as far as like immediate conclusions, I would need to check a few more metrics to really make a conclusion either way. But we've seen the mean dollar invested age increasing, which does indicate that people are holding their coins, which is generally a good sign. We see that its social sentiment is relatively low or relatively bearish, which should provide kind of fundamental support for a rally. We see that its network activity is growing, which is generally a good midterm sign. So overall, I think Chainlink's looking okay. Currently, I think there's no sort of indicators that it's about to break out crazy, but there's at the same time no major indicators that we are priming for a major correction. The amount of Link being moved to exchanges is not all too high. It's actually in a declining trend for quite a long time. So overall, yeah, I mean, a lot of people like Chainlink, and for a reason. Its network and social activity data isn't really saying that we should be all too concerned for its price action at the moment. Not financial advice, obviously. All right, I think I think we should call it a day here, guys. It's been 70 minutes since we started the call, so I think everybody that's interested in kind of continuing this discussion can move over to our Discord. We have a link in the description of this video to our Discord and our trading channels where we talk about this stuff on a daily basis. So if you don't want to wait until next week to talk to us about the market, we can move the conversation there. Brian, is that okay, or do we have any questions that we can answer super shortly before we sign off?
Yeah, that's a wrap. No more questions. Great stuff, Dino.
Cool. Thank you, everyone, for joining us for this week's call or edition of This Week in Crypto. Thank you, Brian and Max, for sharing your thoughts and conclusions about the market based on our data. Everybody that has been watching this call live or has been watching it or is going to watch it after the fact, definitely check out sentiment.net and app.sentiment.net in particular. When you create a free account on our platform, you get a 14-day trial where you have access to all of our metrics, both real-time and historical data, as well as all of the templates that Brian has shared today, and a lot of others that we have not had time to share today. So yeah, thank you everyone for listening, and I'll see you all and talk to you all in 7 days.
Thanks, guys.
Thank you. Bye.
Thank you. All right. Oh, actually.